Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today we are going to be looking at one of the more recent stocks that I have been talking about. It has been pretty popular as of recent. Not CNBC, StockTwits, Yahoo type popular, but popular within my channel. We're talking about ticker symbol NRDS, NerdWallet. This company did communicate that they were going to have softer guidance for the next few quarters. So what that looks like is essentially under promising, potentially over delivering. Um, I was just asked recently what I thought about Nerds 10 days ago. And I did call out that earnings were today. Well, by the time you see this, it'll be a little bit after, but earnings were on Thursday and prices were likely to be better because it looks more like distribution and not accumulation. So we're going to look at Nerds. Let's take a look at the latest earnings call. Let's look at the numbers. Let's look at the guidance. And let's, most importantly, look at the charts. Let's jump on in. All right, you guys, we are on the world's greatest website, finviz.com. I'm going to go ahead and shrink my head and we're going to go ahead and take a look at ticker symbol NRDS, NerdWallet. I'll be out of the way right here. So the first thing I do want to point out is look how bullish this candle is today on the earnings call. That's pretty spectacular. Um, there was 1.86 million shares traded when normally there's only 574,000 shares traded. So there's a lot of demand for these prices where previously I was seeing distribution and not accumulation. So right here you could see there was like there was no interest. People were selling off up here. As it went down, people were buying down here. As it got up higher, people were selling off. And when it got down to here, people were buying it up quite a bit. So the current price is $9.76. The first thing I want to figure out, and I think that you want to figure out as well, is this stock worth $9.76? Let me go ahead and run the numbers for you or with you, and let's do this together. Before we look into anything else, let's just see if this is realistic. We can see that the PE is showing that this is heavily, heavily overvalued, 813 times earnings. In the future, it's supposed to be a lot less, but still pretty overvalued. So let's just go ahead and run the numbers here. So what I do is I take the sales plus the income, and then I add the market cap if it's over 1 billion. If it's not over 1 billion, I don't add it. And then I add the cash and I remove the debt and I divide that by the shares float. And that's basically if you think about, okay, you and a friend own a lemonade stand. It makes $100 a year. You guys have 100 shares in the lemonade stand. If you make $100 a year and there's 100 shares, you and your partner both have 50. That would make the shares worth about $1. But that's not including labor, debt, supplies, emergencies, whatever. Growth. There's also going to be growth. Maybe you get new locations, etc. So that is why we do this forecasting. And then we also look into the charts for the charts to give us a good picture as well, because we want a story. We want the books to tell us that the company's rising, and we want the charts to tell us that the company's rising. So first things first, chart or stock price. So they make 579,400,000 and they're positive 2 million. Good for them. So now we're going to add the cash that they have and remove the debt. They have 83 million in cash, which historically is about medium. So plus 83 million, 9.90. Total debt I saw zero right here. Yep, zero. And then we're going to take this divided by 43.77. So the fair-ish stock price is going to be around $15 on the more aggressive side. And on the conservative side, let's take that 665.3. And if we divide this by the shares outstanding, this number right here, divided by 75.8. So we can see that the stock reasonably should be around $8.70 to about $15. Okay, so the books are saying that this is not too bad. The high end is 15, the low end is around whatever we just looked at, 877. Okay, so that's fine. Let's look at their earnings really quickly because they did forecast some 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 slowness. Okay. So they lost 14 cents per share. They were estimating to lose 3 cents, so they lost a lot, minus 366%. So what you have to realize is sometimes these articles, who did this article? Zacks Equity. Okay, so you see how they did the negative 367%, whatever. Sometimes publications will do this to paint a worse picture than it actually is. So what that means is, oh my God, this they lost 366% from what it was a quarter ago. And then with Zacks, they want the price to go down so they can buy more. I'm not saying it's just a Zacks thing, it's a industry-wide thing. So a quarter ago, it was expected the company would post a loss of 4 cents per share, so that was quite a bit. Um, so actually, they posted a delivery surprise of 150% for their earnings. Okay. Okay, so Zax is now putting their spin on it. So we need to actually open up NerdWallet's. We need to check their business sheet, the balance sheet. This might be sufficient. Okay, chief growth revenue just as I ran. Okay. That's great. We're making disciplined investments. They are, yeah. That's good. Okay, so so they're making disciplined decisions, just disciplined investments into building their brand awareness. That's really good. So and they spent less on marketing. So that means their gross margins, they're spending less to make more potentially. So we're gonna go back. Let's look at the gross margins. I'll go back to FinViz in a second, but let's look. Wow. Other verticals at 48%. Crazy. This is what we want to see here. Okay. June 30th. So over a year, yeah, they're up. Credit cards a little bit down, loans a little bit down. Other verticals up really well. Cash, ooh, cash is low. But I mean, they might have used it for something else. So quarter ended March, they had 169 million in revs. This quarter they had 143. Is this seasonally a weaker quarter? I'm just gonna go down here really quick. I apologize for the jumping. So let's look at this. So 161 over here, 100. Okay, so and then 125. So it looks like the first quarter is the strongest. See right here, first quarter strong, second quarter a little bit weak, third quarter a bit stronger than the second quarter, fourth quarter jump off. At least for 2022, 2021's was pretty good. 2021's Q3 was horrible compared to last year's quarter. So this one is likely going to be kind of a mixed bag. Um, yeah. Cost of revenue. Okay, so lower. And I'm looking over here. So they did. They beat last year's quarterly revs, which is good. I want to see what they guide for the rest of the year. Um, Financial outlook. We're providing guidance for the. Okay, I mean, look at this. They're gonna be at 142 and 147 for Q3, which is beating the 138 by, 5 to 10 million, which is awesome. Okay. Full year variability, but we expect the 20 gap loss, 2%. Um, okay. So it looks like this year, the rest of the year, there's not going to be much action on the business side for financials and growth. So what I mean is, they're expecting 149 for the next quarter, and then for the fourth quarter, it should be more than 83. You know what? We might see a fourth quarter surprise because 2022's fourth quarter was horrible and 2021's fourth quarter was pretty good. So what we could see is they might. Okay, so this could be a dream scenario. Okay. So if they just did 125 million in revenue for Q2. Q3 they're going to do 140. If they do 160, and I'm getting the 160 because we have 100 for Q1, 120 for Q2, 140 for Q3. So I'm getting the 160 there. That would be almost a 100% year over year increase in revenues, which would make the company look like a monster, like a growth monster. So, um, yeah, I think that's where we stand with the books. Let's now look at the charts. So the chart here is essentially nothing too crazy. Um, just very super duper high level. Um, so the stock price has never broken above this line and stayed, and the stock price has never been below this price ever. So, as you can see, we have a little bit of ping pong until we get to Q4. And if Q4 smashes, this could be pretty amazing. And we could have a potential cup and handle here. However, I don't like that the left side of the cup is high. Normally, that's not good. So, what I am seeing is, yes, a cup and handle, um, but also the stock price has never closed under this line on the monthly chart. So, I do want to add a position to this, and I would do it in multiple accounts. We did see that the stock price is $8 to 15. And so what's going to happen is Q one, two, three, four. Yep. So this 125 quarter is going to fall off, and we're going to look at now Q3, Q4, Q1, Q2. So basically, this is going to remain unchanged. Their sales are going to remain unchanged. So the calculations I did were pretty solid in terms of for Q2 going into Q3. Q3, if we get that 140, it's gonna line up with where was I seeing the 83 mil? Oh, I was seeing it on the cash. Okay, I was looking at the wrong thing. That's my bad. Okay, so I lied about the whole 83 thing because I thought that was their revenue and that was not. So, again, their revenue for Q3 is going to be 142, which again, it's going to be in line with what it was last year. So I don't see a huge move coming. It should remain pretty flat. And so for that, I don't really see much appetite to purchase this stock. Um, if I was a long-term investor in this one, which I could see myself doing, um, I would feel comfortable parking some cash here and waiting a few years, get those long-term capital gains. Because what we could see is, potential to the break to the upside. And what would help with that is institutional buys, hedge funds buying, retail investors buying, obviously. And then sales improving, which, they slowly are compared to last year because they're forecasting 142 to 147. Let's see if institutions are eating this up. Okay, it's at 54.5. And now it's at 43.1. So institutions are selling this at the moment. So I would be fine waiting. I would be fine waiting on this one for at least a few months. I want to see if it'll hold above this line that we're looking at here. If it can hold above this line, that would be good. But if it falls through, then I am going to be worried. So, I also have the chart here on Thinkorswim. So here is what it looks like on Thinkorswim. We can see the momentum is going down. Not a lot of strength in the buys, in the buying, the volume. Again, this purple line is like the line in the sand. And then we have the Fibonacci arcs. It's kind of acting as a trading resistance, kind of staying within a bubble here. So again, we'll see how it reacts over the next month or two, but I would be fine sitting on the sidelines. If you're a long-term investor in a NerdWallet, I would see how it reacts the end of August, end of September, end of October. Yeah. I would feel better about making a purchasing decision later on as it gets closer to Q3 because we know they're forecasting that Q3 is going to be better than last year's Q3. So I think we can wait on the sidelines for this one and feel comfortable with waiting. If we do see a rounded accumulation bottom, I would feel good about that. We could also see this come down and act like as a head and shoulders. So what we have potentially is a left shoulder here. We're going to build a head. Maybe the head's going to go like this. Then the shoulder is going to come down a little bit and then rise up. That's one potential. Potential number two is a cup and handle. So here's our cup, the handle, and this takes off. So cup, handle, move. Another one is a cup and handle being built right now. So here's the left side of the cup going down, and then coming back up, creating that cup, the U, and then again the handle. But I mean, the company seems pretty solid. They're making 579 million right now on a year over year basis, so that's good. So yeah, overall, waiting on the sidelines. I think you can afford to wait on this one. Institutions are selling, so just be mindful of that. If it would be nice to see more insider buying. We can see that the CEO has been buying, which is great. We have the chief business officer selling. Annoying. So the CEO owns 685,000 shares. So that really lets me know that the CEO is committed. So again, I would feel comfortable waiting, but I would consider this a long-term stock, in my opinion. Um, yeah, use your own risk tolerance on this one. I mean, if you're gonna hold this for several years, buying in the sevens and eights, tens, elevens, at this rate, Man, yeah, at this rate, they could be $1 billion company, which would be crazy. They're just one acquisition away from bringing in an extra $100 million a year. So they have 100 million cash. Did I even add that? That's quarterly. I added 83. Okay. Wait. Okay. So they're going to have a lot of cash. How much cash did they say they had here? Come on. Cash. That's the wrong one. Here's we go. Cash. Cash. Okay. So they only have 61 million right now. But they're comparing that on a, is that a year-over-year basis? So they do have 61 million in cash as of now, I believe. I just want to see the overall. Like, come on. Cash, 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 cash. So yeah, their cash is going down. They have 61 million cash as of June 30th. So again, if they can deploy that cash, I mean, they could spend it on marketing to earn some more income, or they could do a acquisition. I feel like either way, they're set up for success in the long run. So yeah, that is my take on NerdWallet. If you made it this far, please consider hitting the subscribe button, hit the like button as well. I'll talk to you later. Bye.